The information provided on this webinar does not and is not intended to constitute tax-related or legal advice. Instead, all information, content, and materials available on this webinar are for general information purposes only. Good afternoon, everyone. I am Bonnie Ross, Director of Client Services with Fiske & Company. With me today are Stacey Parrish, Managing Director, David Goldleaf, our Senior Director, and Senior Accountant Z Steele, all of them part of the Fiske & Company Tax and Accounting team. Today, we want to talk to you about the American Rescue Plan Act and everything that is included, as well as questions that we know all of you as individuals and business owners have. First and foremost, I want to thank Walter Kluwer for placing together today's content. So Stacey, let's start with you with a quick overview of the basics. Viewers want to know what is actually included in the American Rescue Plan Act. Can you update us with a quick summary, some insights, and an overview of what's included?
Absolutely. Thank you, Bonnie. There's a lot of interesting items in the bill. It is definitely a mix of new important items, and it also revisits older items we saw last year in previous relief bills. First and foremost, the biggest thing that affects the greatest number of people is the economic stimulus payment of $1,400 per taxpayer, and that also includes dependents. But it is subject to income limitations that reduce or eliminate the amount of credit for higher income taxpayers. There is also a significant expansion of the child tax credit that increases the amount of credit and also makes it partially advanceable. The definition of the dependent child has been expanded so that more parents can claim the credit. The earned income tax credit has been changed, which expands the pool of people to who the credit applies and also increases the credit. And there's also some other minor changes. There has also been a change to the child and dependent care credit. Again, an increase in the amount and making it more expansive to whom can claim it. A new addition on the individual side is the fact that unemployment compensation received in 2020 is tax-free up to the first $10,200 of income received. Again, this is subject to income limitations, and just released the other day, individuals have been given an additional month to file and pay their 2020 taxes. They now have until May 17th to file and pay any remaining balance. On the business side of the bill, there are several important updates. There has been an extension of two very popular tax credits that were first put in place by the original COVID relief tax legislation. The paid sick leave and paid family leave credits, as well as the employee retention credit, have been extended through September. These can now be used against hospital insurance payroll tax, as well as the old age survivor disability insurance payroll tax, which we commonly refer to or know them as Social Security, FICA, and Medicare tax. There's also a big expansion of the premium tax credit, which increases the dollar amount and the amount of people who can claim it. Also included in the bill is an expansion of Cobra and other health benefits. This is an extremely powerful bill.
Thank you, Stacey. David, as Stacey referenced, there are some considerations for unemployment credit as well as the child tax credit and when to file. Can you give us some insights and some details of what to look for?
Sure thing, Bonnie. Thank you. Great overview, Stacey. The change in the child tax credit is for 2021 only, and it is, as Stacey mentioned, a big increase, jumping from $2,000 to $3,000 per child. The age range was also increased to include 17-year-olds. What makes it even better is for children under the age of 6, the credit has been increased to $3,600. And the really good news is it's fully refundable. The increased credit amount phases out for taxpayers with incomes over $150,000 for married taxpayers filing jointly, $112,500 for head of household, and $75,000 for single filers. Taxpayers will also have the option to receive temporary monthly advance payments equal to 50% of the eligible 2021 child tax credit. These payments are scheduled to start around July of 2021 and are based on income from tax year 2020 if filed. If you receive an excess amount of the allowable credit, then you must generally repay the excess amount when you file your 2021 tax return. Originally, it was thought that they would be monthly payments, as I stated earlier. However, the bill provides that if the IRS cannot meet monthly payments, they could come up with a more feasible administrative frequency. The verdict is still out, as we do not know what the frequency will be, but again, its anticipated starting date is July 1st. So the real question is, how will the advance payment amount be determined? Well, there's a lot of guidance in the statute about this. The IRS is directed to use the best information available, and they are also directed to project, believe it or not, the ages of the children by using the 2019 returns that were filed. They're supposed to project what the age of the child would be in 2021. One might think that may be difficult for the IRS to do, but that's what the statute outlines. The IRS is also supposed to, and this is very important, set up an online portal where the taxpayer can either elect out of that advance payment I mentioned earlier, or provide updated information that would be relevant to modify the amount. For example, the birth of a child that might increase the advance payments. Given this information, the advance payments could change over time as the IRS gets additional information from the online portal or from other sources. In summary, the IRS will determine the amount of the advance payment based on either 2019 or the 2020 tax return if filed, unless the taxpayer updates their information on the soon-to-be online portal. Remember, we're talking about payments starting on July 1st, and now returns aren't due until May 17th. So if some reason you don't want to file your 2020 tax return before that July 1st date, you'll need to file an extension. Advance payment credits is again the government's attempt of putting money in the taxpayers' pockets as soon as possible. We recommend that you have a conversation with your accountant to determine whether you should file your 2020 return before May 17th, or whether or not you will need to update information once the IRS portal is open. Moving on to another topic, as Stacy said earlier, the American Rescue Plan contains a new provision to exempt $10,200 of unemployment benefits received in 2020 from income taxes. The exclusion is retroactive, applying to unemployment insurance benefits received last year. This provision, as of now, will only have an impact on 2020 returns. This last-minute exemption is bound to create confusion for taxpayers and puts additional pressure on the IRS to quickly provide guidance for those who have already filed their returns. And that is exactly what they did. The commissioner of the IRS testified before Congress yesterday and said that the IRS will automatically process refunds for individuals who pay taxes on their unemployment benefits. The automatic refund will mean that recipients of unemployment benefits who have already filed their returns for 2020 will not have to file an amended 2020 tax return to claim their refund. Bonnie?
Thank you so much for all that detailed information, David. Let's go ahead and talk about the specifics for those rebate checks. Can you provide some?
Absolutely, Bonnie. The rebate checks you're referring to are the 2021 economic impact payments. And this plan will directly have taxpayers receive $1,400 stimulus payments almost immediately. This third round of payments started rolling out to millions of taxpayers this past weekend and were mostly sent by direct deposit. According to the IRS, this first rollout included approximately 90 million payments, which were valued at more than $242 billion. So let's talk about who is eligible to receive this third stimulus payment. The $1,400 payments are for qualifying adult filers, plus $1,400 to each dependent, including college students and qualifying relatives who are claimed as dependents. If you are a single filer with an adjusted gross income, AGI, of up to $75,000, you get $1,400. However, your payment is reduced if your AGI is above $75,000 and will completely phase out at $80,000. Married couples filing jointly with an AGI of up to $150,000 get $2,800. However, the phase out begins at an AGI of $150,000, and at $160,000, no payment will be received. Lastly, head of household filers with an AGI of up to $112,500 get $1,400. However, the payment reduction begins at $112,500, and the payment will completely phase out at $120,000. If you're eligible and haven't received the stimulus payment this week, don't worry. The IRS is continuing to disperse payments throughout the coming weeks and months.
Thanks, Dave. Wow. So everybody should wait a little bit longer if they haven't received their checks. And that is very complicated with all those figures. Let's further discuss one of the biggest questions on everyone's mind. When do I file? I know that there are considerations to keep in mind, including important items you must ask your clients as you being an accountant before making that decision.
Yes, there are. Like the first and second economic impact payments, the IRS will not treat this third payment as income. Technically, it's a tax credit. It is set up as an advance payment of a recovery rebate credit, and it will not be included in your 2020 tax return. However, it will be used to calculate the recovery rebate credit in the 2021 tax return. Taxpayers are in effect getting an advanced refundable tax credit now in the form of a third stimulus payment, rather than having to wait to get the money from the credit in 2022 when the 2021 tax return is filed. Eligibility for this third payment will be based either on the 2019 or 2020 tax return. There are still taxpayers who haven't filed their 2020 tax returns yet, since the filing deadline isn't until April 15th. Well, actually, now it has been extended to May 17th. If your 2020 tax return isn't filed and processed by the IRS, if your 2020 tax return isn't filed and processed by the time the IRS starts dispersing the third stimulus payments, the IRS will use your 2019 tax return to get the information it needs to calculate your payment. If your 2020 return is already filed and processed, then your payment will be based on your 2020 return. So you're asking, how do I determine when to file my 2020 tax return to get the maximum stimulus payment? There are considerations to consider that could increase the amount of your stimulus payment, such as your income was lower in 2020, you had a child in 2020, you got married, or you're no longer someone's dependent in 2020. If you think your third stimulus payment could be more due to these circumstances, then you want to electronically file your 2020 tax return as soon as possible. That way, you have the best chance of having it processed before the IRS sends you your stimulus payment. On the flip side, the circumstances to consider in which to delay the filing of your 2020 tax returns are things like your income was higher in 2020, you had a death in the family in 2020, you got divorced, or can't claim your child as a dependent anymore. These are all legitimate circumstances that could affect your decision whether to file your 2020 tax return right away or to delay filing to optimize your stimulus payment. Is there a potential drawback to delaying the filing of your 2020 tax return? Absolutely. If you're expecting a 2020 refund, you have to decide if the extra money you would get in your stimulus payment by waiting to file is worth the delay in getting your refund. A lot of information is packed in here, but keep in mind the third stimulus payment is a tax credit that you're getting now in advance of the credit you would be getting on your 2021 tax return. If by chance you haven't received your third stimulus payment at any time during this year, you will likely receive it in the form of a refund when you file your 2021 tax return next year in 2022. The final takeaways: there are circumstances to consider in getting a higher payment. Also, you stand a much better chance of getting your 2020 refund much quicker if you electronically file your tax return rather than mailing it to the IRS. Bonnie?
Wow, Z, thank you. There is certainly a lot of important points to consider about tax filing this year. So let's move back to Stacy. Let's talk about health and benefit provisions. I know there are also some important considerations there for everyone.
Right, Bonnie. So I think we covered most of them, but I do want to mention the new Cobra Credit that goes to employers who are providing health coverage under the Cobra rules to departing employees. This credit is now 100%. This is the first time Congress has passed something that would cover the entire cost of providing health care for a worker who has been laid off. And the premium tax credit expansions are also dramatic in a number of ways, including the fact there is no income limitation now for individuals to claim the premium tax credit.
Thank you, Stacy. That's certainly some good news for employers. So let's talk about looking ahead and some of the different provisions and credits that we want to keep.
Bonnie, as I said earlier, the child tax credit was for 2021 only under this legislation. But those increases that I talked about was something that Biden campaigned on. So he's looking to make those permanent. This act was something that was passed relatively quickly to get immediate COVID relief. The child tax credit and some of the other provisions are part of Biden's long-term goals, and therefore he hopes to make the increases permanent. Later this year, when a more comprehensive tax bill is expected to be presented, it's anticipated that the bill will make the provisions permanent. It's also true for the earned income tax credit, which is something else that Biden campaigned on. He wants to make more taxpayers eligible for this credit. The expansion of the earned income tax credit in the American Rescue Plan Act only applies to 2021, so they will likely look to make that permanent as well in the next tax package.
And Bonnie, let's note that the $10,200 in unemployment benefits won't be taxable, but that's just for 2020. Now, most of us accountants find it hard to believe that Congress would exempt that amount for 2020, but not for 2021 when so many people are still out of work and collecting unemployment benefits. So we'll see whether they include such a provision next year on unemployment income. Another thing to be aware of is that this next bill will not move as quickly and will be more difficult to pass. Congress has detailed rules about limiting the number of bills that can pass with one vote, whether it's 50 to 49 or 51 to 50. Congress and the Senate has to pass a budget resolution in order to authorize these narrow majority big bills, and we'll see whether Congress gets that done later this year.
Thank you so much for that information, Stacy. I really want to thank Stacy, David, and Z, as well as all of you for joining us today. We covered a lot of very important topics. We went a little bit over our 15 minutes, but we really wanted to get this information to you. If you'd like more information from Fiske & Company and our accounting and tax team, please visit us at our website at www.fisco.com. You can also call us directly, and our phone number is listed on our website. Thank you again. Stay safe and have a terrific day. Bye-bye.